The markets are crashing, people are panicking, and most of them have no clue what's actually happening. The Nasdaq is down 2.6%, the S&P 500 dropped 1.7%, and Bitcoin just got obliterated, down 8.5% overnight. Nvidia lost nearly 9% in a single day. Hundreds of billions of dollars wiped out. And the headlines? Pure fear. Recession, stagflation, the worst crash since 2008. That's what they want you to believe. But let me tell you something. Every time this happens, the same people lose and the same people win. So who loses? Retail investors, the ones who panic, sell at the bottom, and swear off investing until things calm down. Who wins? The ones who see the game for what it is. The ones who prepare while everyone else is running scared. So today, we're breaking down why stocks are really crashing and it's not what the media is telling you. The one move Trump just made that's shaking up the markets and how it could flip everything, and what's coming next and how to actually profit from it. Because here's the reality, markets don't crash forever. They crash, they scare people out, and then they create the biggest opportunities for those paying attention. And right now, most people are looking in the wrong direction. By the end of this video, you'll know exactly how to play this crash to win. So let's get into it. Let's get real. This isn't some small dip. This is a full-blown market wipeout. The Nasdaq just lost 2.6% in a single session. S&P 500, 1.7%. The Dow, 1.4% gone. That's trillions of dollars vanishing from the market overnight, but it gets worse. Nvidia down 8.7%, Supermicro Computer 13%, Amazon down 3.4%, Bitcoin collapsed 8.5% in 24 hours. And this isn't just a tech crash. 8 of the 11 S&P 500 sectors closed in the red. The only ones that survived? Consumer defensive and real estate. Translation, investors are running to safety. Here's what that tells you. This isn't panic selling, this is a full risk-off rotation. Big money isn't just selling stocks. They're buying bonds and gold at the fastest rate we've seen in months. Treasury yields are slipping and volatility is spiking hard. Now, here's what happens next. Retail investors start selling out of fear. The media fuels the fire with recession headlines. Weak hands get shaken out of the market. And while that's happening, smart money is quietly positioning itself. Because here's the truth. Every crash has a bottom, and when it bounces, the biggest gains happen in the first few days. Most people sell when they should be buying. That's why they lose. So the real question is, what's actually driving this sell-off, and how do you make sure you don't get wiped out? Let's get into it. Markets don't just crash for no reason. Something triggered this, and right now, 3 massive forces are colliding to create the perfect storm. Number 1, Trump just pulled the trigger on tariffs. A 25% tariff on Canada and Mexico just went into effect. And in less than a month, China gets hit with another 10% tariff hike. That's a sledgehammer to global trade. This isn't some small tax increase. This is billions in extra costs getting passed down to businesses, cutting into profits and dragging stocks down. But here's the part everyone's ignoring. Trump has done this before, and every time, markets tank at first, then snap back. Number 2, inflation is sticking around. Everyone thought inflation was cooling off. It's not. The ISM Manufacturing Index just came in at 50.3, barely above contraction. But the real problem? Prices surged 7.5 points to 62.4. The translation? Businesses are paying more and they're passing those costs on to you. Higher costs mean weaker earnings. Weaker earnings mean lower stock prices. That's why companies are tanking right now. And number 3, recession fears are back. The Atlanta Fed just dropped a bomb. Q1 GDP is forecasted at negative 2.8%. That's a contraction. That's recession territory. And Wall Street was betting on 2 Fed rate cuts this year. But if inflation stays high and the economy shrinks, the Fed is trapped. And when the Fed is trapped, markets get wrecked. So what happens next? The media screams panic. Retail investors sell at the worst possible time, and just like that, another wealth transfer from the weak hands to the strong ones. But here's the real question. Is this crash real, or is it just another one of Trump's negotiation tactics? Trump just shook the markets with his latest tariff move. 25% on Canada and Mexico and another 10% on China is coming soon. And just like that, stocks are crashing. But here's the real question. Is Trump actually trying to start a trade war, or is this just a setup for a bigger move? Because if you've been paying attention, you've seen this play before. Trump's playbook: bluff big, then negotiate. In 2018, Trump hits China with massive tariffs. Markets panic, then he cuts a deal, walks it back, and markets rip higher. In 2020, same thing. Trade war talk, markets drop, then boom, deal made, markets soar. Donald Trump loves playing this game. He talks big, forces the other side of the table, and then makes a deal that flips the market overnight. So is this time different? Probably not. So let's talk about why this could flip fast. Trump knows market crashes hurt him. He doesn't want to tank the economy. Businesses are already pushing back. CEOs are lobbying hard to stop these tariffs. China will retaliate. If tariff sticks, it hurts both sides. Trump isn't dumb. He knows how this ends. So here's what happens. Markets sell off hard. Trump signals he's open to talks. Negotiations happen. Tariffs get delayed. Markets recover almost instantly. And just like that, retail investors who sold in panic are buying back in at higher prices. This is a classic Trump strategy, and if you're on the wrong side of it, you lose. The smart move, position now for the rebound before it happens, because when this flips, it will happen fast. So right now, the market is down big and everyone is acting like it's the end of the world. But if you know how these cycles work, you realize one thing. This could flip just as fast as it fell, and it all comes down to one man, Donald Trump. We have to understand that markets crash on fear but recover on certainty. So here's what's happening right now. Tariffs are crushing sentiment, businesses are panicking, stocks are getting slaughtered. Retail investors are dumping their shares because they're scared, emotional, and making the same mistakes they always make. But behind the scenes, smart money is getting ready. They know something retail traders don't. This crash isn't long lasting. Because if Trump reverses course, and he's done it before, stocks will explode higher overnight. And history says this reversal could be violent. In 2018, Trump slammed China with tariffs, markets crashed, then he delayed the tariffs and the markets ripped. In 2020, trade war panic caused a sell-off, but as soon as he signaled a deal, the stocks ran to new highs. And in 2022, inflation fears sent stocks lower, but once the Fed adjusted expectations, the markets took off. So here's what to watch. Number one, Trump softens his stance. Any hint of negotiations will send the markets rebounding. Number two, the Fed pivots. If they indicate even the possibility of a rate cut, the rally will accelerate. And number three, short sellers cover. That will create even more upside momentum. And just like that, the biggest wealth transfer happens in days, not months. So ask yourself, are you positioned for the reversal or are you about to get left behind? Because when this flips, you likely won't have time to react. I know everyone's waiting for the Fed to swoop in and save the market, but what if they don't? For months, Wall Street was convinced the Fed would cut rates twice this year. That's what investors were betting on. That's what had the market pumped up. But now, that's starting to look like a fantasy. The Fed is trapped. Here's the problem. Inflation isn't dead. The ISM manufacturing report just showed rising prices. If inflation sticks, the Fed can't cut. The economy is slowing down. GDP forecasts are now showing negative growth. If we hit a recession, the Fed will be forced to act. And the markets are tanking. Stocks are dropping, but if the Fed bails out the market too soon, inflation gets worse. So what does Powell do? Nothing. Now let's talk about why the Fed's next move will make or break investors. If the Fed keeps rates high, the pain continues. Stocks stay weak, the market grinds lower. But if the Fed even hints at a future rate cut, boom, instant market recovery. Here's what will happen. Bond yields will drop. That means money floods back into stocks. Number two, tech stocks will explode higher. The same companies getting crushed now, they'll lead the rebound. And number three, short sellers will get destroyed. And when they start covering, that's when things will really take off. The market is on a knife's edge right now. The second Powell speaks, trillions will shift overnight. So ask yourself, are you positioned for the right move, or are you going to watch from the sidelines while other people make a fortune? Because the real winners are already planning for what happens next. Most people lose money in the market, not because they pick bad stocks, but because they panic. They think they're smart. They think they'll sell before a crash and buy back in before the rally. But here's the truth. Nobody does that consistently. Not you, not me, not even the best hedge funds in the world. And if you try, you'll lose. And here's a fun study for you. Did you know missing just 10 days can wreck your entire portfolio? Let's talk numbers. The S&P 500 has averaged a 10% annual return for nearly a century, but only if you stay invested. Because if you try to time the market and you miss just the 10 best days, your returns get cut in half. And guess when those 10 best days usually happen? Right after the worst ones. You don't believe me? Look at history. In 2008, the market crashes, the next year up 23%. 2020, COVID hits, stocks collapse, then fastest recovery in history. 2022, inflation panic, markets tank, then 2023 was a record year for tech stocks. Every bear market in history has been followed by new all-time highs. Yet what does the average investor do? They sell at the bottom, buy back in when it's already too late. You see, the market rewards those who stay in. A $10,000 investment in the S&P 500 in 1980, worth over $1 million today. But if you jumped in and out, if you tried to time the dips, if you sold when the media told you the world was ending, you lost. Because here's the kicker. Compounding only works if you stay in the market. If you sell during a downturn, you don't just lose money, you lose the future growth of that money. That's why the rich get richer. They don't sell when things get tough. They buy, they hold, they wait. So what's your move? You have two choices. Number one, do what everyone else does. Panic, sell low, buy high, repeat the cycle, end up broke. Or two, play the long game. Stay in, keep buying, ignore the noise, and let time do the work. Because the market doesn't reward the smartest people, it rewards the most patient ones. The market is volatile. Smart money is making moves. If you want to know what I'm buying, what I'm selling, and what plays I'm making in real time, join my Patreon. You'll get real-time trade alerts, my top plays, and daily market breakdowns. You'll know exactly when to strike and how to position yourself before the crowd catches on. If you're tired of guessing and want to level up your investing, this is your chance. The link is in the description. Get in now.